What's up, everyone? It's Caddy with Money Investing. A very strong day for the markets, with the Nasdaq rallying a little bit over 2% on the day. We've got the S&P 500 up a little bit over 1.6%, and the Dow Jones rallying over 1.14%, as the 10-year yields rotate back down a little bit under 4%, once again trading now down to 3.9.5% as of the time of this video. And well, guess what? We did take a trade on the long side of TMF. That is an inversely correlated bond prices ETF, which pretty much trades higher if the yields come down. So I had an entry today before it took off. Literally, it was up a little bit over 6%. I could have had a better entry. I mentioned this in our Discord. My plan was to actually be a buyer of TMF at some point this week, so should have been able to pick up a little bit earlier this week, but better late than never here on this trade, because I do believe there's a lot more upside with that stock, with that ETF, and I will be doing a separate, more dedicated private video for members only on TMF, on that trade idea over the weekend, probably this Saturday or Sunday. And if you want to get access to that, the link's going to be down below if you're interested in joining us. And of course, if you enjoyed this video and find it helpful, don't forget to subscribe and hit that like button, and the link to our Discord and Patreon, like I said, is going to be down below if you're interested in joining us and getting access to all the trade alerts, trade ideas, options alerts, and all the private videos and benefits in our Discord as well. So this right here was a very quick TMF trade setup, and again, I am looking to buy more, and we'll be doing a separate video on this. And Google here continues on that upside. We had a trade idea on Google as well. Continues to push through, up another 1.85% on the day, trading back above $94 per share. So target remains at close to $99 to $100 per share for Google. I want to share some memes here for the markets, because a very strong day definitely deserves a meme. And it kind of reminds me of this meme of where the house is literally on fire, and you've got this, meme of the little girl with the evil laugh, and that pretty much feels like what the markets are doing right now. S&P 500 and the Nasdaq. And another meme that's super funny is that literally, this is another meme where you're just like in the middle at the coffee table, just sipping on coffee, while everything around you is just kind of crumbling and on fire with the clouds. It's just so funny, because the markets here, we've talked about the valuation multiples, we've talked about S&P 500, Nasdaq in terms of the aggregate valuations. I mentioned the Q4 earnings yesterday in my other video. And not to mention inflation, interest rates, and economic conditions, and yet the markets keep drifting higher and higher. So those are some really interesting sort of takeaways that we have to understand. And what's really interesting is the new potential for a Volmageddon 2.0. So there was a report that was released today that was actually, it's been going on for some time, but Genevieve on Twitter, shout out to her, pretty much put together a very nice format of kind of laying out what's really going on in the markets under the hood, and talking a little bit about 0 days till expiration options. These are called 0 DTEs. So you may or may not have heard of them. If you are in the options world, you definitely most certainly have heard of them. But these are expirations contracts that are expiring in less than a day, right? So you're pretty much day trading those options, and the time value of money is literally about as short as it can get, right? So these options expire in less than 1 day. So you're buying, let's say, at 8 a.m. or 9 a.m. when the market opens, 9:30 a.m., 10 a.m., and these options expire at 4 p.m., right? So these are about as speculative as it can get, because if you are, let's say, buying or selling, let's just quickly go over what the problem really is. And this is the main issue here. So short-dated S&P 500 volume as a percentage of total volume, it's now worth over 40%, meaning that S&P 500's short-dated options contracts, their volume has skyrocketed to over 40%, 44% to be precise. And just about a year ago, so if you come back to, like, let's say, 2016, this number was under 10%. And even as far as like a few years ago, this was trading at 19%. So the popularity among options traders with 0 days till expiration options have absolutely skyrocketed, more than doubled to over 44%. And what's even more scary is the part that we are now at over $1 trillion in options volume, notional volume, every single day. That is like, 20 trillion is the entire market cap of the US stocks, right? And we're trading $1 trillion in notional value. And this is what's really also interesting, is that single stock options trading volume is now bigger than shares volume for the first time ever. It is now almost 120%. meaning that the options popularity has grown so much that people are not interested in trading shares of stocks, but instead trading options of those said stocks. And they are more inclined to trading zero DTEs. So again, that's going to be 0 days till expiration options, which obviously could create a lot of volatility because these are, how should I put it? These are literally gambling. Like, of course, you've got to have some strategy in it, right? If you are day trading a certain stock, you would just, instead of day trading that stock, you would just day trade an options contract and you can exponentially grow your P&L. But they can obviously be very speculative, and if not done the right way, especially if you're on the selling side, if you're not on the buying side. If you're on the buying side, okay, your max loss is the debit paid, the premium, you're done. Like, you can kind of rinse and repeat. But if you're a seller, man, you're obligated to come through with those obligations. Whether you are selling a put or a call, you're either obligated to deliver those shares or you're obligated to buy those underlying shares. So eventually, if that option contract expires or you get assigned or you get called up, there's going to be a lot of problems. So Genevieve puts it this way. So zero DTE options are ultimate tool for speculating. You can take a position in an option and realize a huge gain or less within a few hours. A call option selling for $1 could easily hit $2. It's 100% return by the end of the session, literally in less than 6 hours. If the underlying stock has a good day, or it could hit $0, which is pretty much losing 100% of your premium. So what's the problem? Massive trading in options introduces volatility risk because at the end of the day, every single options contract is attached to an underlying share, right? We can't forget that. Every single options contract is attached to an underlying stock. And that's what creates that volatility risk. And buying and selling in options influences trading in underlying securities, which is very true, underlying stocks here. And a rush to sell options could lead to a rush to sell underlying stock, causing a price crash that has nothing to do with the stock's actual value. From Reuters, analysts at JP Morgan estimate that a large market move would cause these options positions to spark buying or selling to the tune of $30 billion, delivering a volatility shock similar to the Volmageddon crash of 2018. So quite an interesting take here. And like I said, the problem isn't really when you're buying calls and puts, because obviously the most you can lose is the premium that you lost, premium that you paid in debit. But the problem occurs if you are selling these 0 days till expiration options, because if you are, let's say, selling a call, right, because you believe the stock price is going to go down, and let's say that you sell a call and instead the stock price actually ends up in the money, now you're obligated to actually deliver those shares, right? You're obligated to actually sell your shares at that strike price. And if you are trading naked options, if you are, let's say, trading a naked call, if you're sold a naked call, then you are theoretically short that stock, and your loss potential theoretically would be unlimited because the stock price can literally rally as much as it wants. Like, there's no ceiling to how much a stock price can rally, right? So those are the types of things that I feel like people need to be aware of, and what are the real dangers of trading 0 days till expiration options. Because if you don't know what you're doing, especially in the options world, man, you can be in so much trouble. I've seen some of the most horrible Reddit posts with the worst possible P&Ls. So please be careful. This is not what we do. When I trade options, I'm mostly selling covered calls and cash secured puts. That's the most conservative, most safe strategy out there when it comes to options. So please don't mix the two. And I'm also not trading 0 days till expiration. I'm trading, at least 30 days out, at least 1 month out. So that gives me more time value of money, gives me more leverage to kind of play around with the underlying stock and kind of see how it trades over the course of 1 month as opposed to 6 hours. So with the way this is going on, I wouldn't be surprised if it's like 1 minute till expiration options. That would be nuts. That would create just so much volatility, but just wanted to put it out there. Be careful, and this could create some volatility in the markets, considering that this is also crazy how there's more options volume now as opposed to shares. Just speaks to how popular options trading has become over time. And I do blame social media for this, because again, if you go on TikTok, if you go on Reels, I mean, everyone's multimillionaire, everyone's trading options, everyone's getting rich through options trading. So it's kind of like putting you in that cycle, in that loop. But you have to understand, those can be anomalies, those can be extreme cases. For you to actually be successful, you need to find a strategy that works for you, and start small. Start with a proper strategy, start with something that has a high success ratio, and then you can explore certain strategies in this sort of area. but definitely be very, very careful, because the last thing I want to hear is that somebody losing a ton of money in options trading because they didn't manage their risk properly or they didn't know what they were trading, right? So my message to you is simply be careful when you're trading options, right? Understand what you're trading and just, as much as you can, stay away from zero days till expiration. Now, this right here is another catalyst, or pretty much not a catalyst, but came out something today. So U.S. housing market is crumbling under the weight of higher mortgage rates and rock bottom affordability. So we talked about, the housing market yesterday. I did a video specifically talking about it, so make sure that you do check that out. We talked about, a lot of different types of data and facts and interesting sort of takeaways. One of the things that I forgot to mention in that video was the inventory levels, because I did get a few comments in that video talking about, housing prices are not going to crash because inventory levels are so low. Well, apparently, and there was a report about that. I can't remember where it came out, but I'll share the link in our Discord if I can. But this report suggested there's a lot of inventory off the market, right? It's not really on the market right now. It's off the market. And the number, if I remember correctly, was closer to 14 million homes in the US that were off the market. And even if a small percentage of those homes pretty much going on the market and start kind of being put on sale, that will immediately double the supply of available homes in the US and could really cause imbalance between supply and demand. So inventory levels are being controlled in a way that keeps the real estate market kind of stable and prices relatively okay. But if they start to release that inventory out in the market, then obviously that's going to create a lot of supply with not as much demand, considering how interest rates are higher, mortgage rates getting past 7%, affordability is down, because again, if you do the math, it doesn't really make sense for anyone to be buying a home at a 7% interest rate because of how much you'll be paying in interest over time, over a 30-year fixed mortgage rate. The interest expense is huge versus if you were financed at, let's say, 4%, 3%, 2%, and then not to mention if you were buying to rent or if you were literally just renting a property versus buying, right? There's huge differences. So affordability and demand definitely pulling back. It is retracing. We talked about how prices in the first quarter, or at least quarter to date, are down close to 2%. And in January, they declined by 1%. These are some of the markets that were down specifically. For example, Alaska down over 4.5%. We got Wyoming down over 3.5%, closer to 4%. We got New Mexico, looks like, was down another 4%, 3.5%, 4%. Mississippi down, or Missouri and Mississippi down a little bit over 3%, and we got Delaware down a little bit over 3.5% as well. And then some of the other markets like New York, Massachusetts, Colorado, California, Arizona, Michigan, Maine, all of them down at least 0.5% to as much as 2.5% in the month of January. So we're definitely seeing a bit of a pullback, and I think that this is only going to continue, considering that there is a on average 2-year lag, 8 quarters lag between interest rate hikes and, of course, how the real estate market reacts. And in that paper from yesterday, we also talked about how there is a positive correlation, at least in the first year, and then the real estate market hits a disturbance, and then we start to come right back down. Now, going over to some economic data, PMI services came in a little bit stronger than what the expectations were. We came in at 50.6 versus the consensus of 50.5. So slight improvements here in the services index. Composite index came in at 50.4, so we're back above that 50 level. And this right here was the ISM services index, also coming in a little bit better than what the consensus was, 54.5, and we came in at 55.1. So once again, a little bit higher than 50. So this once again suggests the economy is relatively strong, relatively good. And as a result, the markets did really, really well. We got Apple here pushing higher. We got Google, Meta up over 6%. Tesla's up 3.6, Amazon pushing higher, Nvidia, Broadcom, Oracle, Adobe, Microsoft, financials, all sectors, all stocks except for Costco because they reported their earnings, but everything else was super, super green on the day. And this right here, again, the entire market, the breadth here, Dow Jones, there was 25 stocks pushing higher on the day versus 5 that were declining. S&P 500, 435 stocks in the green with 56 selling off. And the NASDAQ 100, we had 89 stocks pushing higher with only 12 selling off here on the day. So all 11 sectors for the S&P 500 in the green, leading by technology, consumer cyclicals, and communication services. And I'm super excited for the 10-year yield trade because I do believe the 10-year yield eventually will get tapped out, and we'll talk about that in our more specific video for the members because there's going to be a lot of research done with that 10-year yield. We're going to be going over some historical data. We'll be going over some forecasting, what the terminal rate could get up to and what the extreme level for the 10-year yield could look like, and what the plan will be for TMF and TLT and some of these bond prices ETFs. So again, if you want to get access to all of that, it's going to be super insightful. with the trade ideas and trade alerts as well. The link's going to be down below if you're interested in joining us. But markets here for the last 1 week, very, very green, pushing right back up. But over the last 1 month, we're still kind of struggling a little bit. Natural gas prices pushing past another 9% here. Sugar prices, ethanol, silver prices on a futures basis. We got volatility down, coffee prices, soybean, lumber, and orange juice selling off. Bitcoin kind of hovering around 23,000, and Ethereum also a little bit under $1,600 at the moment. So from market standpoint, volatility was down over 5.7%. And despite what you might see in the markets, call volumes might still be higher for volatility because that's being acted as a hedge, not specifically as a market directional trade, but instead just simply a hedge. If volatility spikes, great. If it doesn't, the premium is lost and that's a hedge and you call it a day. But of course, VIX coming down to under 19 here, once again, inside that red rectangle. Time for us to be cautious is now considering how low the volatility is. And we've got lots of data points coming up. So we've got unemployment next Friday. We've got retail sales. We've got inflation. We've got the Fed. And next week, we've also got Jerome Powell talking at the Housing Committee and the Banking Senate on Tuesday and Wednesday. So I will be live to cover those as well. Those are usually much longer, like they last like 2 to 3 hours. So we will be live for a very long time. So make sure that you do tune in for that, for when we go live, right? So hit that notification bell so you don't miss out on when we go live. But yes, volatility is coming down to that red rectangle. Definitely going to be very cautious moving forward. And oil prices here, once again, pushing higher. It's not a surprise. I mean, this has been the trade, textbook trade for such a long time. It's been kind of bouncing in and around that channel for a very long time. It's been trading, between $71 and $81 per barrel. Low 70s is going to be that support. Low 80s is going to be that resistance. And we're just kind of trading back and forth in that range for a really long time. Bitcoin here, just mostly consolidating sideways right now after the sell-off that we saw. If you go over to the daily chart here, we are seeing a little bit of a pullback down to that support at 22,400, kind of hovering at that level. If you do break down even further, next support is going to be down to 20,600. And for Ethereum, we are also coming down after hitting a hit by a resistance here. And the next support is going to be sitting roughly at 1489, closer to $1,500 for Ethereum. Now, talking about S&P 500 here, once again, a very strong move, getting a very solid bounce. And by the way, Tom Lee had a really interesting analysis, which I wanted to share. And I don't have the chart in front of me right now, but he basically talked about how 6 reasons why the markets can rally very strongly over the next 8 weeks from March to April. And we talked about it during our live stream. But the bottom line is he was expecting better inflation reading. He was expecting a pivot in the bond market, which we did get a little bit today. He's expecting Jerome Powell to come in a little bit soft with his interest rate hikes. And he said that volatility will drop off. And he also mentioned that S&P 500's valuation's not too high. But there was a little bit cherry picking in that data. So I'm not going to go into too much detail in that right now in this video. Another thing that he's mentioned is the trend with respect to how the markets have performed. The win ratio is 100%, right? 100% of the times the markets have rallied in March and April. Every time we have seen over a 1.4% gain in the first 5 days of the year, considering that the prior year was negative. So those instances, I believe, have happened 8 times since the 1950s, I believe, or might be a little bit further back. But the win ratio is 100%, and the median gain is 7% with an average gain of 6.8% in March and April. So that's the bullish thesis that Tom Lee has, but that's, obviously Tom Lee is almost always bullish. But that being said, we're getting a nice bounce from that 200 simple moving average. Buyers are really starting to step in, 2.78% gain here. And the NASDAQ also pushing through with a very solid move to the upside. Next resistance and target's going to stay put at 12,280. And the S&P 500 next target and resistance going to stay put at that 300 simple moving average, sitting roughly at 4,100. So that's going to be the level to watch. And we talked about how there is a potential for this chart to also move back up, considering a short-term bounce. Again, I mentioned this in our Discord not too long ago. I think earlier this week, I talked about how this has come down from highs of about 85, 86 down to about 84. And once again, we're moving past those levels. We have pretty much almost doubled here from 17 to over 39.40, so more than doubled in the last couple of days as more and more stocks have moved back up their 20-day moving average. Talking about Apple here. And Apple with a very solid bounce back higher. It's approaching that resistance once again. So this right here is going to be that level to watch as a resistance for Apple, sitting roughly at 157. So that's going to be that level to watch. And talking about Amazon, we've got Amazon sitting at roughly around 94.90. This is another swing trade idea that I shared in our previous updates. Resistance going to stay put $104, $105 for Amazon. Support level is going to stay put roughly around 91.78, 91.75, and anything below that is going to be a potential stop loss here, and the next support is going to be down to $81, $82 per share. Talking about Tesla, the huge winner on the day, pushing up over 3.6%. We're back inside this sort of bull flag formation. We're back inside this area of consolidation for Tesla. And what we have really seen is just lots of back and forth for Tesla in that range. Resistance is going to stay put roughly at that 200 simple moving average. That's going to be sitting roughly at $220, kind of in line with this red rectangle that you guys see on the chart right now. And support level is going to stay put roughly around 175 to as low as 165. Still have my covered call. Not really closing that out until I'm up at least over 90-95%. I might be a little bit stubborn with that, but I roll that contract over, so I need that profitability if I want to actually make some real gains. So that right there is going to be that resistance at the 200 SMA. We're kind of slowly and steadily kind of retesting that back up. It's going to be sitting roughly at 215 to 220. Support level is going to stay put at 178. Talking a little bit about PayPal here. PayPal on the day also pushing up almost 3%. So very nice move to the upside, very nice breakout for PayPal as well. So nice potential reversal considering the short-term bounce here on the RSI MACD. Very, very oversold. Next target and resistance is going to stay put at roughly at that 200 simple moving average, sitting roughly at $82, $83. So that right there is the level that we are paying attention to. And we've also got a pretty decent gap to fill over here. But looks like PayPal's on the way up. It's going to be testing a resistance at $82, $83 potentially over the next few weeks here. Talking about Square, and Square also with a very nice move, 3.64% here, starting to break apart from this downtrending channel. This is going to be that next resistance to watch, sitting roughly at 82.65, because we have gone rejected at that level literally in the middle of February. So that's going to be that next resistance all the way up to that target of an 89, close to $90 per share for Square. Talking about NVIDIA. And NVIDIA here, NVIDIA's definitely got everyone confused a little bit. $238, momentum carries it forward. Definitely a lot of sentiment pushing it through. Volume was a little bit lower, but once again, almost a $600 billion market cap. And the next target and resistance really is going to be all the way up to 269. So this right here is going to be the level that investors are going to be paying attention to moving forward. And right now it's getting validated at 230. So we got a very strong support at 230 for NVIDIA. We came down to 231. Buyers stepped in, pushed back up to 230 at 239. And the next resistance and target is going to be 269. And the valuation's too high. Technicals don't suggest this rally here, but hey, sentiment and AI and momentum can do anything in the market. So NVIDIA, off you go. Advanced Micro Devices here. AMD also getting a little bit of a bounce back up to over 81.52. So starting to break apart this resistance and back above that 200 simple moving average. So lots of euphoria, lots of momentum coming right back in. And I kind of like AMD's chart here overall because it seems to be a very, very nice, consistent rally because it is making higher highs and higher lows. So if you kind of put together some very simple lines here, what you will see is that AMD is actually making a nice higher high, higher low, higher high, higher low, and now it's all the way starting to push right back up. So if it does, next resistance and target is going to be 91 to as much as $96 for Advanced Micro Devices moving forward. Talking a little bit about Meta. And Meta here on the day, also a very nice move back up to 185, getting a nice breakout past that 300 simple moving average for the first time in a long time since January of 2022. So over a year ago, Meta was trading above that 300 simple moving average, and here we are trading above that level once again, and also breaking out above that resistance of 183, 184. So those right there are going to be some levels to watch for Meta. Talking about Netflix here, and Netflix continues to sell off, still oversold. So there is potential that Netflix also takes part in this rally going into next few weeks. And if you do get that short-term bounce from Netflix, resistance is going to stay put at $330. So that's going to be that level to watch, and support level is going to stay put at $274, $275 per share for Netflix moving forward. Talking about Google, but my fair value still lows at 200 for Netflix. Google, very nice recovery here. RSI MACD bouncing right back up as expected, and resistance going to stay put roughly around $100. That's the next target that I have on Google, and support level is going to stay put roughly around $88, $89 per share. Talking about Microsoft, and Microsoft here also with a very nice rally, 1.66% move to the upside, and the next resistance is going to stay put at that 300 simple moving average, so roughly at 265, 266. So that's going to be the level to pay attention to. Support level is going to stay put at 245, but of course my fair value closer to low 200s for Microsoft. And last but not least, we got Shopify. Shopify with also a very nice move to the upside, up 5% on the day with the support level staying put at roughly $41.30, $40 per share. And the next resistance is going to be staying put inside sort of like this gap that it needs to fill and all the way up to $54, $55. So those right there are going to be some levels to watch for Shopify moving forward. So bottom line is the market continues to charge higher without any regard to what's going on with the economy or the yields or interest rates or any of those things. But market sentiment's very strong. The volume is decent, and a lot of speculation in the markets. Not gonna lie, with the day sell expiration options, definitely be on the lookout. Definitely be careful with respect to a Volmageddon 2.0 if the volatility spikes and we start to see the markets act a little bit weird. But hope you guys enjoyed this video. Have a great weekend. Make sure that you drop a like, subscribe, and the link to our Discord and Patreon is going to be down below if you're interested in joining us. Get access to all the alerts, trade ideas, all the Discord channels, along with a lot of our other private videos and tutorials as well. So as always, happy investing, and I'll see you all in the next video.